welcome to my channel where I talk about stocks that are interesting. So if you find that interesting, then be sure to like this video and subscribe to my channel. Um, just in case I talk about something you find fascinating. Very interesting company we're going to be taking a look at today. Lam Research Corporation. LRCX is the ticker. As always, this video, like all videos I make, is an independent analysis consisting of my personal opinions and is not a recommendation to buy or sell a particular security. So, without further ado, let's get into it. Here's the thing. I'm just going to qualify this entire video here at the beginning. Lam Research is a semiconductor equipment manufacturer. Um, Semiconductors are not a strong circle of competence for me. Okay. However, that does not impact the thesis for this particular company. And that's going to become clear here in a moment why. Um, but this company is very interesting for a multitude of reasons. And um, as always, I'm going to give you an overview of the company, what they do. I'm going to discuss the basis of their economic moat, if they have one. Um, we're going to take a look at the investment thesis for why it might be a compelling investment for the future. We're going to discuss and evaluate the financials, take a look at the valuation, dividend metrics. We're going to discuss some of the risks with this underlying business and the stock itself. We're also going to do some technical analysis as always. So let's get into it. Lam Research Corporation. Lam Research Corporation, headquartered in Fremont, not too far from where I'm located. Lam Research Corporation designs, manufactures, markets, refurbishes, and services semiconductor processing equipment used in the fabrication of integrated circuits. So, in layman's terms, and you'll have to excuse me, I'm feeling a bit under the weather. So, if I'm sniffing and coughing, that's why. This company, it manufactures equipment that is used in the manufacture of semiconductors. So, in other words, semiconductors are a very hot button topic right now, given the likes of Broadcom, Nvidia, Taiwan Semiconductor. Uh, where does this company fit in? You notice how it's performed very poorly over the last year because it doesn't have the high flying brand like an Nvidia does. The end customer of this company is the semiconductor foundry like Taiwan Semiconductor. In other words, this company supplies the producer of the end equipment, whereas a company like Nvidia is more of an intellectual property creator. They design very specialized equipment that they then turn around to Taiwan Semiconductor or whoever, Intel in the future. They turn around to Taiwan Semiconductor and they say, hey, we have a design with these specs. Can you get this done for us? Yes or no? And so Taiwan Semiconductor is basically the manufacturing source for a company like Nvidia. This is very oversimplified, by the way. If you are an expert in semiconductors, I welcome you to comment on the video below and educate me and my other viewers because I am not an expert, like I said. However, what I do understand is that you have kind of the designers, you have the manufacturers, and then you have the manufacturer equipment manufacturers, of which Lam Research is one. Of particular note, um, the key products that Lam Research sells are primarily plasma etch systems. And what that basically means is for a wafer, a silicon wafer, an etch system is a type of technology that does exactly what it sounds like. It etches the grooves into the wafer chip that allow for the transfer of information. So obviously, you think about how every single silicon wafer, every single wafer in a semiconductor system needs etching, right? And furthermore, they need that for every single machine that has that capability. Um, I think this is a good time to note that I do have a position in this company, um, and I it's actually in my main account right now. It's the only semiconductor stock that I own, um, and as for why that is, I just think that it's the out of all the ones that I've looked at right at this moment, it is the most attractively valued. But that's a side note. I'm going off on a tangent. Um, so, how does this company generate revenue? Okay, well, they manufacture the equipment, right? They don't just do etching, but that's the primary business. They create the equipment, and then a customer like Taiwan Semi or whatnot takes the equipment, right, in their foundry facility. And then Lam Research is also servicing that equipment in installed, what they call an installed base unit. So when that equipment is sitting there, Lam provides the servicing for the installed equipment, which is more of a sticky recurring revenue source versus just selling the equipment. Now, semiconductors are cyclical, um, subject to very volatile supply and demand. The market goes through booms and busts. So obviously, the new equipment sales are subject to those market cycles, whereas the more stable servicing business is a little bit more counter-cyclical or acyclical. So that's interesting, right? Um, so again, there is a lot of complexity, and you see kind of some of the cyclicality here in the revenue. There's a lot of complexity in these products and in this industry. Um, Again, I'm not an expert in the technology, and I think to really be a strong, highly convicted investor in companies like this, I do believe that it is required to have a strong grasp of the technology. However, to capture some of the tailwinds of AI and robotics and all that, I do believe that semiconductors are a worthwhile investment. I think the easiest way that we can take a look at that is just in terms of market position. Chip making equipment companies, um, you kind of have the top three by revenue. ASML, um, they all of these companies are very similar. ASML effectively has a monopoly on extreme ultraviolet lithography machines. Um, Again, equipment that manufactures semiconductors. Applied Materials is more similar to what Lam does. Lam Research has um, the number one market position in etching. Um, in fact, in the 1980s, which we'll see, their first product was an etch tool, and they were really the pioneer of the current top technology. So they do enjoy a wide moat. So when companies have a wide moat, of course, they have a strong tendency to provide returns on invested capital far in excess of the cost of that capital. And we see that here with their 10-year performance. We do know, we'll just take a look at the total return here. This stock is a major compounder, handedly outperforming the index over just about every single time frame. But right now, in a much steeper drawdown versus the index, however, has been outperforming year to date. In terms of the thesis behind an investment in a company like this, let alone this company, my thesis is very simple. Okay, I'm a strong believer in the AI revolution, the AI industrial revolution. Um, I actually think that in an AI dominated world, um, first, the returns from an investment sense end up in hardware. The hardware investment comes first in terms of super cycles. I think we saw that with the stock price of Nvidia um, really going parabolic over the last few years. But I think that that trend will continue, and here's why. So robotics technology is accelerating very rapidly. You see, I see a future where AI, the LLM technology, we know it's a little bit more commoditized now. However, that technology can be embedded into a computing device that is, inherent to a robot, for example. And you can imagine any sort of manual labor work can be partially automated with robotics and AI. That's my belief. So when you have basically a lot of what drives demand for semiconductors, it's electronic devices. All electric devices need semiconductors of some form, right? Especially complex ones. So in my mind, there's a huge wave of build out coming um, in terms of manufacturing semiconductors that will be placed into robotic applications. All right, and so I think that's the main thesis here is that this sector is ripe for continued outperformance of the index with much heightened beta and volatility. The thesis behind this particular company is that they enjoy a wide moat in the little niche that they dominate within this. Then you add all of the tariff volatility going on right now, where our current administration here in the United States is really putting the clamps on things to onshore and reshore a lot more domestic manufacturing. Semiconductor manufacturing is there's a geopolitical element to that. It's more important to have semiconductor manufacturing be based domestically for every nation than it is for probably just about any other products or goods besides, food. It's very important that powerful nations own the majority, if not the entirety, of their semiconductor supply chains because that's how they manufacture, in theory, a lot of technological advancements. So I think having a company like Lam located domestically and also with some of their manufacturing domestically already um, makes it a, a company with maybe a little bit more relative safety than others in the sector due to geopolitical concerns. For example, Taiwan Semiconductor, one of the most, if not the most important companies in the world. Of course, they're a major customer, and there's risk with that. They're a major customer of Lam Research. Taiwan Semiconductor is located in Taiwan, and there, if you're paying attention, there's, I believe, a material amount of geopolitical risk with operations located in Taiwan. Now, that attributes itself to geopolitical risk factors here with this company as well. However, I feel a lot more, I guess, comfortable as an investor parking funds in a company that is domestically located primarily versus one that's based in Taiwan, although this company is exposed to Taiwan. So, yeah, to sum it all up, the thesis is that semiconductors, there's a lot of money in semiconductors now and especially in the future. I see no reason why that will not continue. So then it's about picking the winners in semiconductors. Okay, there's been some clear winners the last several years, most notably Nvidia, um, second best being Broadcom, probably. And those companies they've outperformed this company somewhat because of what they're selling. but I think this company flies under the radar, and that's what makes it interesting. So let's take a look at the financials. I'm actually going to start by taking a look at the earnings presentation here. So this is the December quarter 2024, posted January 29th. So we're already about halfway through the forthcoming quarter since then. Just so a couple details. Headquarters are located in Fremont, California. Again, very close to here. I've actually driven by their headquarters, seen what's going on. They have locations across the globe. Notably, uh, they're not located in Mexico. They're not located in Canada. They have one facility in Europe, no facilities in China. Okay, they do have locations in Malaysia and Taiwan, South Korea, and India. This I want to highlight right here. Growing installed base units. When this company is making money by installing units or getting orders for units to be installed, but then they're also monetizing the servicing of said units. You do see somewhat of more tepid growth here. Okay, but remember, we're pulling service revenues on the base, so it continues to compound. Wafer fab to rise slightly to 100 billion. So management is guiding for faster growth than the industry, indicative of wide moat. And I quote, benefiting from technology inflections in DRAM and foundry plus logic, as well as upgrade focused NAND environment. So this is where I start to trail off a little bit in my technological understanding. Deposition and etch are increasingly vital to semiconductor manufacturing. Let's take a look at the numbers. Okay, so I believe this is full year here, 16.2 billion of revenue quarterly, 4.38. This is important to highlight here. And this will come back in the risk factors analysis. So systems revenue is both equipment sales and equipment upgrade sales, it looks like. So we see here memory being 50%, foundry being 35%, logic other being 15. Here's what's interesting. Revenue by region. Okay, so we got Asia, 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 Asia. So that's what? 15, 32, 57. 88% of sales coming from Asia, with the remaining 12% coming from the US and Europe. I think, that just gives you an idea of where semiconductors are being manufactured right now. That gives you an idea of where things stand. Obviously, there's some tariff risk when you look at this, particularly with China. We know that China, we've put tariffs on them, they've put tariffs on us. Does that dampen demand? Well, okay, a lot of what China is doing is, China is a powerhouse of semiconductor manufacturing as well. The fact that they're purchasing these products does indicate their the strength in market position. I actually do expect this number to go down and this number to increase, notably because Taiwan Semiconductor announced multiple very large investments in Arizona, I believe, to kind of ease some of the geopolitical risks that they're facing, also to fall in line with tariffs. So I think, again, very clear risk factor in the geopolitical, the revenue mix. We got currency risk and we've got uh, geopolitical tension risk. Okay, so very clear what's going on there. You got to get comfortable with that as an investor in this company. Customer support business group is a fancy term for service revenues of the installed machines. This seemingly is an installed machine, somebody servicing. Quarterly revenue in December 1.7 billion. So our total revenue being 4.38. Okay, so what is that? 40%, 30 to 40% of their revenue coming from the more stable recurring revenue source. It's what I like to see. It's down slightly quarter over quarter, but up about 30%, more than 30% from the year prior. Really good. Gross margins hovering right around 50%. Very strong margin profile. Operating income up. Operating margins down slightly. 6% growth. High single digits. It is true that the semiconductors have the equipment that they sell have been a little bit challenged over the last year. That's reflected in the stock price. Okay. Seeking Alpha gives it a D minus valuation. I don't necessarily think I agree with that. You see here, the company currently trading at about 20 times forward earnings. I think is very reasonable for a company like this. Couple more things to cover before we take a look at the financials on Seeking Alpha. Their headquarters being in Fremont. All of these are manufacturing locations in America. And then we have manufacturing located in Asia. Now, very intelligently, the company is not locating their plants in China. They do have one facility in Taiwan. So in a world where China is invading Taiwan, that's going to hurt this company from the standpoint of their customer being Taiwan Semi, but Taiwan Semi building out so much capacity in the United States. That gives United, in fact, here, hold on. Taiwan Semi investment in US. There should be a news story about this. Taiwan Semi announced $100 billion investment in U.S. production. The new build-out includes 3 fab facilities, 2 packaging facilities, and an R&D center. So think about what that means. Okay, that means that they're about to buy or place orders for Lam Research materials. Okay, that's what that means to me. We're jumping around a lot. Basically, looking at this, I like where these facilities are located versus the alternative, which is like a bunch of concentration in a little bit more risky areas of Asia. Now, one thing that I don't have here are the breakdown in numbers. In other words, what percent of the products are being manufactured in each respective location. That would be instructive. I would urge investors to look into that more carefully. Let's take a look at the financials from a high level view, like we always do. Income statement on an annualized basis going back 10 years, from 5.25 billion to 16.2 billion. That's over a 3x. 2.3 billion of gross profit to 7.7 billion. That's like 3.5. So what that says to me is that gross profit margins are going up slightly, have gone up over time. And then operating income from 900 million to 4.8 billion. That is more than a 5 times increase. So both in terms of gross profits and net profits, what we're seeing is margin expansion across both fronts, particularly with this operating leverage that we're seeing here. R&D spending continues to go up, 825 million to 2 billion. So they're plowing about a little bit more than a quarter of their gross profits into research and development. That is a significant amount. So they've been able to strongly increase R&D expenses while continuing to maximize operating efficiency. Very, very good looking numbers. Very indicative of just strong industry tailwinds there. Let's take a look at the share count. We have from 1.6 billion weighted shares outstanding to 1.3. That's pretty good. That's like, I don't know, 17% of float, I think, off the top of my head. Another thing to look at is dividend per share, 8 cents a share to 86 cents a share in less than 10 years. That's a 10x dividend growth. That's pretty crazy. That's pretty crazy. This company is a beast. Let's take a look at the balance sheet. Um, just steadily increasing levels of cash despite continued uh, buybacks. $5.6 billion of cash. I think their market cap is 90 something billion. Um, how does that translate versus their long-term debt? Let's take a look. 4.5 billion of debt. Notice how the debt really, it's gone up over 10 years, but lower in the last report than it was in 2020. So that's really good. Okay. They have more cash on hand than debt. They could retire all of the debt. Very strong looking balance sheet. That's just a great, great looking numbers. Let's take a look at the valuation metrics. Kind of a mixed bag here. If we go by our Seeking Alpha grades, we see here's trading at, and I agree with these relative grades here, very attractive forward earnings multiples, especially compared to lots of companies in the market that don't have this kind of market position. Price earnings growth, both forward and backward looking, trailing 12 looking very good. Not necessarily better than the sector median, the sector being information technology. That's not really a good proxy. Um, Good looking price earnings growth multiples. Price sales, I think the price book here being what it is, I do agree that that's lofty because a company like this, in theory, should have a lot of equipment. Um, they should have a lot of equipment. So what does that tell you? The price sales and price book multiples being high, the price earnings being low. There's a significant amount of intellectual property baked into the stock price, is what that says to me off the top. Let's take a look at the dividend. Free cash flow yield above 4%, approaching 5% on a forward estimated basis. Dividend yield looks fair in line with the historic average. I mean, it's actually a little bit lower, it looks like, than the prior 10-year average, but lots of volatility in the dividend yield. And oh man, how great would it have been to pick this thing up at above a 3% yield in 2019? We see here that if you would have invested at the IPO in 1995, you'd have a 68% yield on cost. That's great. So, in terms of on a yield basis, looks fair, looks fairly valued. We see here dividend growth has been exceptional. You see here they more than doubled their dividend in this period, and then their most recent increase was 15%, very strong. So the current dividend yield being 1.25 roughly versus a double-digit dividend growth rate conceivably into the future. Very strong Chowder score here, yield plus growth. Very strong Chowder score. Let's talk about some of the risks. I mean, I think I've really tried my best to discuss those. I think it goes without saying. Risks. Semiconductors are volatile and cyclical. I think, again, I would urge you to do your own research on what part of the market cycle that we are in. However, based on my analysis, we are in kind of a low point of the cycle, not necessarily the bottom. Who knows? we're in a bit of a down cycle period here. The reason you could tell that is you see here that we had a boom right here in their revenues, and revenue went down 15% or so here and has recovered somewhat. So uh, cyclical risks are present. You have currency risks in terms of their sales, and then you also have geopolitical risks. And I think that those are hard to quantify. However, those are potentially the most destructive if they come to fruition. Okay. But if you're investing in semiconductors, no matter what, you are exposed to those tensions. So I wouldn't assign more weight or overthink things in that regard. So yeah, I think those are the risks, and I would urge those interested in making an investment in this company to consider those. I think another risk factor here is just beta. Okay, it's very clear that this stock is higher beta than the S&P 500. We even see that reflected today. The stock price is down 1.5. S&P being down 1.25. So um, the company is more volatile than the index. So that's just very clear, very straightforward risk. If you're going to invest in this, expect it to be volatile, right? Expect it to be volatile. But in terms of what I think about this company, I think, when I assign a company a grade like buy, sell, hold, I'm looking at it very, very long term, where it's going to be 20 years from now. And from that standpoint, I think that the company is a buy. I really like the company. I like the end markets that they're exposed to. I think there's a lot of tailwinds there, like I mentioned before. And I think that the valuation is fairly attractive right here. It's good enough. It's growth at a reasonable price. Do I think that it looks like a good entry point? You look at TradingView. I'll leave that up to you to make a determination on. However, here's what I see. Each of these candles, by the way, is a week. So here's what I notice. This is a total chart crime, by the way. I mean, you get an idea just how much and inconsistent this company is when it comes to trend, right? There really isn't a clearly discernible pattern other than the stock is in a downtrend right here. Stock is in a downtrend from, it's interesting that the stocks went up so much here too, because you really had the boom times were in this period, right? Up to here. This would have been obviously a great place to enter. But what I'm seeing here is that stock is in somewhat of a downtrend, um, and where it is at right this second, it continues to fall. Again, you see my analysis here. This isn't really a clearly discernible pattern. All right. But there's nothing about the chart that makes me like say this is a pound fist on the table buy at this price. I mean, you see how volatile it is. It doesn't seem to really conform to strong conventions. What I do see, however, is if I kind of extend this, if I extend this line out here, you kind of see this channel here that's pulled up again. So again, this isn't an exact science, but right now it does appear to be trading at a very weak level of support based on that chart. If you look at this chart, it's a little bit more apparent. You see how there's kind of a clear trend support, here, a clear trend support for the stock, and we're kind of at the low point there. So I would urge that you take a very long view if you're interested in investing with this company and get comfortable with the technology as best you can. I know enough at this point to feel comfortable about it, but there is a lot more that I can learn, and I will continue to do so. I will not be entering into this with strong conviction until the technological aspects of the products are more apparent. But I do believe that for long-term investors who are looking for exposure to AI, robotics, mega trends, the upcoming industrial revolution of AI, you're looking for like sane exposure, collecting a safe and growing dividend. I think that this company really fits my profile very well as somebody who's more of a value oriented investor. And if that speaks to you, then I would urge you to continue to do research in this and get comfortable with it. Um, Take a look at their website. They have a great website. They have lots of information on here. I mean, even just this slide show here. On one hand, you have company milestones, on the other, industry. Um, just showing kind of the growth of how big wafers are, um, hardware that has been created using semiconductors, 1981, right? That's how long this company's been around for. So, anyways, I'm really compelled by the company. Hopefully, you've enjoyed this video. I've certainly enjoyed discussing it with you. And if you enjoyed this, be sure to like and subscribe. I've been really spotty with my video creation lately. It's because I've been working on some of my other projects, and I have an exciting update that I will share soon once once it's complete. But in the meantime, I'll be making more of these videos as well, because I know my viewers are interested. And anyways, so yeah, I've had a great time with this, and thank you for watching, and I will see you next time.